Pleasure to be in Riga. Again, as well, I have to say a disclaimer that this is a general introduction of the fund, and it's not meant for any public offering or any solicitation here in Latvia. So I'm happy to talk about the fund itself, how it got started, and where we are today and where are we going. Perhaps a snapshot where we are today. We're a listed Baltic real estate fund today in Tallinn, and what we do is invest in core cash flow properties to generate rental income, and from there to pay out dividends. In the Baltics, I think a lot of investors know, and feel very comfortable with real estate. But normally, what have been done in the past is that you buy an apartment, you rent it out. You generate some rent, you have some people fix the apartment up after tenants change, and this is how it goes. So one maybe a couple of apartments, and then you deal with the renting itself. Then you have the commercial real estate segment, where you buy big properties, you rent them out to multiple of tenants. The lease agreements are 30, 40 page long. You have bank financing, also very advanced in terms of contractual relationships and visibility. But this has been in the Baltics only a game played by the, let's say, bigger players. Investors that can invest at least 100,000 euros, maybe 125,000 in certain countries. So where we are today is that we can offer commercial real estate investments to a general public. And as it is listed on stock exchange, anybody can buy. And the price per unit is basically today around 1.34 euros. So even one unit can be bought if that is the interest. So we listed the fund in early July. It was a very hectic period in the end of June because of Brexit and the volatility in the capital markets. That was quite a nerve-wracking weekend for me just before the listing. I thought, are we going to now lose the 9 months of work that we have been doing for this? But, it was to a good surprise that we ended up with a very strong result, raising 30 million euros additional capital in June, which we then deployed into two additional assets. One is G4S headquarters in Tallinn, and the other one is Upmalas Biroi here in Riga. Strong office assets, and still a few months later, fully let. Maybe a little bit of the history of how we got started, and this was back in 2010 when the fund called Baltic Opportunity Fund was started, and we got together with a group of Swedish, Finnish, and some Baltic investors to come back to the Baltic real estate markets to invest into commercial real estate after the crisis, which meant that property prices had dropped, the rental levels had dropped as well. But we started to see the nearshoring trends of Nordic and international companies opening up their back offices here, accounting services, call centers, you name it. And that was a very good trend, especially seen in Vilnius. I think a bit less in Riga and Tallinn, but this was something that the Nordic investors very much related to, meaning that same tenants that are, for example, in Sweden or in Finland, but they're located in a different geographical region. Then they looked at it also from the point of view that the banks who were here were also Nordic banks financing here, and the building construction quality was state of the art. In many cases, even better than seen in the Nordics. And then they look at the investing case that the yields are also much higher. And does it make sense, risk-return relationship-wise? And they thought, yes, it does. And we made our first acquisition in 2011, and then one acquisition per each year. So we were very careful about what we want to buy, and also we more better results we had, the more confidence we had within the investor base. So we have historically paid out for the past 3 years an average dividend of close to 7% cash on cash, and we have now grown to be a portfolio of 7 assets with a gross asset value of 129 million euros. Our loans, which we aim to keep at 50% on long term today, are at 54% leverage level, and this is what we also want to do for the coming years. We have selected our investments to be in the capital cities, and this is, we have lovely cities here in the Baltics, but unfortunately most of them are losing population, and the cities that are not losing population are actually growing, are the capital cities. And this is again the way to manage liquidity risk. The best place to manage liquidity risk is the capital cities. So we invest only in the capital cities. We also have invested into only office buildings and retail assets as of today. So we have quite a good diversification of these assets across segments and across cities. And what we are really proud of is the international tenant base that that was the goal at the beginning, and now the portfolio has these international but also local names as long-term tenants in our buildings. Now, again, if you look at it, real estate investments today in the negative interest rate environment, globally, money has been pouring into real estate. And that has been pushing yields down, and in some countries, the yields have never been that low. Again, if a Swede, looks from their perspective, then, in case their prime yields are around, 3.84% levels. In Denmark, slightly higher, and then you see the yields in the Baltics, and then you compare them again, not only to the risk-return relationship that you get in the region by investing into real estate, but you compare it to other asset classes as well. You compare it to shares, you compare it to bonds, and as some of my peers have been saying, that the bonds are the riskiest asset class today. What happens if the interest rate actually starts to increase, and it will increase. Now, this slide here, or picture, I don't know if this works, but if you compare the investment environment to 10 years ago, then the yields were around 6.5%, in 2006, 2007, but the cost of debt was 5%, 4-5%. So there's the spread that was actually left after paying the bank loan for the investors was very, very, very thin. And at the same time, of course, everybody was betting on capital gains. Yes, we buy a property in 2002 or 3, and because of the European Union, NATO, and our good economies growing, we will be able to sell the property at 2 or 3 times the value. Now, when we started, the cost of debt was around 2.5%. Now it has even decreased further down. So there's a lot of money to be made by just holding the properties on a long-term lease and having the cost of debt fixed for a long-term time. And this is the key decision, the basis for the key basis for the decision made by the investors beginning of this year. Not to liquidate the portfolio, but to keep it, to grow it, and then to go public. Because if you keep the portfolio like this, and you make the fund without the term, because that was something that had never been done in the Baltics before. Also last decade you had the start and you had to have the end. But since the portfolio was generating profit, that was the basis for the idea. But you don't want to have a long-term evergreen property group making investments which is not known, and that was one of the key reasons why we listed on Nasdaq stock exchange. We listed in Tallinn first, but there was already a plan at the beginning of the year at the investor meeting to go follow up with a listing in Stockholm as well, because we want to have the best of both worlds. In the Baltic states, listing in Tallinn, for the Baltic investors predominantly in euro, and in Stockholm, listing for the Nordic and Swedish investors in SEK. So hopefully we will be able to fulfill the strategy during this year and have a very public property group for everybody to invest in. This is the portfolio that we have, and we're very proud of the portfolio. It is on average has a very good occupancy. The portfolio occupancy today is less than 2%. And we have approximately 70,000 square meters of net leasable space. That means that if you look at the valuations today, the portfolio is valued at an average of around 1,840 euros per square meter. We do see potential also in rental levels in our portfolio because of the assets. Some of the assets are very, very centrally located, like Europa Shopping Center in Vilnius and Coca-Cola Plaza here in Tallinn. In addition to really centrally located properties, we like also neighborhood shopping centers, and I would say that you probably recognize Sky Pikernieku here. It's maybe not a very most attractive property as such, but it's a very strong property, I think, for the immediate catchment area that lives around the property. The tenant, the brand is very strong in Riga, Sky. And it caters really to the average citizen, you know, not wanting to buy food, but also services, and to go for a cafeteria, maybe some pharmacy. So these type of neighborhood shopping centers were actually most resilient in terms of rental generation also during crisis years. And then, yes, the office buildings which house these nearshoring tenants with their IT department of Swedbank, for example, SEB Global Services in Upmala, and G4S. G4S is an interesting tenant. We know this tenant since already 2003-04, when they were in another building, and they were planning this headquarters for a very long time. And finally, they were able to move in at the end of 2013 to have their own building on a long-term lease. And what is very specific about this building is in the cellar you have the specific vault where most of the Estonian euros in cash are going through. So billions and billions of euros. It's very high security area. So this tenant needs such area. So we hope that with our good relations with them, we're able to maintain them in the property for a very long time. So this is a few words about the portfolio, which yes, we are very proud of. I guess this slide depicts how we got started and how we grew sustainably and got more profitable once the portfolio grew. The cost base became more efficient, and it is true that we are as well benefiting from the low interest environment, low cost of debt environment in terms of cash generated. Now, if you ask me, you know, do the interest rate, are they going to grow? Are they going to start growing? Is that cost base going to start growing? Then probably yes. But I think the common understanding today is that it will start to grow in Eurozone probably very, very gradually. And that's where I have my, let's say, in addition to a 3-year vision, I have my 10-year vision. And right now we try to fix our loans for 5, maybe 6, 7 years, and then be prepared in, let's say, the 3rd or 4th year to renegotiate the loan agreements once again. The cost of debt may be higher, but we try to manage the portfolio so that the rental levels will be also higher by then. Yes, this is the history of the payouts that we've had to the investor base, which at that moment was 27 investors. Today, after the IPO in Tallinn, it's 300 investors. And with this structure, we do plan to pay out dividends or make, let's say, distributions, cash distributions on a quarterly basis. A little bit about the structure and the team. Then the structure is an Estonian contractual real estate fund. It's not a company. It's not an AS structure, so it doesn't follow the exact taxation rules and let's say, governance rules that a company has. However, it is very specific, and we have really used it very specifically for our purpose, which is real estate investments and real estate trust concept that I think Ivars was mentioning a little bit about, that is very well known in the broader world, especially in US, Canada, and Australia. It is meant to be there to generate rent from properties and to pay it out. So our dividend policy is as well to pay out at least 80% of the rent that we generate. If we want to make new investments, we will go out to the capital markets and to raise more money. We will not use, we will have a little bit flexibility to take opportunities in case we really see them, but we will not use normally the cash that is generated by the tenants for additional investments. We have a supervisory board of the fund, I think a very representative one, Raivo being the chairman in Estonia, Andris representing the Latvian area, and Per Möller is a Dane, but has had long-term experience in Ernst & Young, being a partner and a Baltic partner of the audit department. David Bergendahl, who is also an investor in the fund, was elected just a couple of weeks ago to the supervisory board because he's also a board member in many of the property companies listed on Stockholm Nasdaq. So we hope to get some good expertise from him in that way around. And then the management board, together with me, I have two Lithuanians, Algis and Ausra. Algis being in charge of the pipeline, also a long-term player in the real estate market in the Baltics, and Ausra our head of fund administration and risk management. We do buy our properties in the SPVs that are owned by the fund. In Latvia, it would be Asia, in Estonia, OÜ, and UAB in Vilnius. So we also take all property loans and all the obligations and rights for each property into one company. So we manage our risk as much as possible as well. A little bit about the management fees. And fund as such that we manage is a very specific fund. It has a very specific fund rules sort of document, which is something also different from having just a company, which has articles of association, which is a much broader document. In the fund rules, it's very clearly stipulated what we can do in certain situations. What is our investment strategy? What are the limitations? How do we have to pay out dividends or make cash distributions? That's a more correct term. And also, what is the management fee? And what do the investors get for that management fee? So management fee for this fund is regressing. Management company of this fund is Northern Horizon Capital, which is also a player has been a long-term player in the Baltics in terms of managing real estate investments. So the services that we offer include fund management services, financial management, accounting of the fund administration, and risk. So, and it will be it's a regressive model. When again, when we grow, we'd like to add more efficiency into the system, and so on this slide you can see that it is going to be as low as 0.5% on the net asset value. A performance fee element, which is of course to motivate to do a good job, is also there, but it is capped. So in case we do a very, very good job, then we're sort of capped in that manner, so that the investors still benefit a lot more than we do. But happy to have this also in place. after some strong negotiations with the investor base. So to summarize, I think what we're pursuing here in the Baltic states is the lowest risk, let's say, strategy, investing into core commercial real estate in the Baltic capitals. We take, our loan strategy is also to take not more than 50% for the portfolio of loans, and that's how we get to negotiate the best terms with the banks. We do see potential in especially in some of these properties to have rental growth above the inflation, which is always written into the lease agreements as rental growth index annually. And we are governed by the Real Estate Investment Fund rules, which are a very strict document to allow us to do very specific things, and not to maneuver around to start looking at other unexpected sort of strategies. And last but not least, a lot of investors and a lot of people ask me, are there opportunities really to buy in the Baltic states? And I think this is the let's say, expertise that we want to bring as fund managers. That yes, it's not easy, but having been in the market for a very long time, I think we know when the timing could be right with certain sellers, and that's what we pursue. So we don't only pursue auctions and the public sort of offering of certain buildings, but we also target off-market deals. Thank you very much. I'm happy to answer any questions.
Okay, thank you, Tarmo. Vai kādi jautājumi šeit zālē, lūdzu? Es varu pārtulkot, jā?
I would have a question regarding yield levels and your forecasts regarding the next 2-3 years. How do you expect them? They will go down or they will stay on the same level?
It is very tough to answer that. Let's say I have strong arguments for both, to say that they're going down. I mean, the volatility in the geopolitical scene that you see, now in the world may actually move property prices upward, especially in our area. Property yields upward, prices down. But then again, if you look at alternatives and what's happening with the real estate deals and what has been happening in the area, in the Nordics, I think the risk-return relationship is continuously very attractive. For example, let's say, the yields in 5-6 years since the crisis, I mean, everybody says that the yields were 10-11% during the crisis. That's theoretical, because, I mean, there was only a few deals made during those years, 2009 and 10. So where the transactions started to be made, to be happening was maybe at around 8.5%, maybe 9%. So the yields have really come down, 1.5, 2% to a level of 6.5, to 7.5 in the prime areas. So a lot of Swedish investors do argue that I think there's potential for those yields to go down even further. But I think I'm more of a believer myself as a fund manager that the pressure on yields have been very strong already, and I think they will stay stable, or they will start to increase a little bit over the next, let's say, 6 to 12 months.
Would you also consider investing into building an office? Or it's just
we are not, thank you, we are not the developer. We invest into cash flow objects, and either we buy properties that have been developed already, or do a sale leaseback with a property owner that wants to stay there as a long-term tenant. But having said that, one of the properties that we have, actually G4S property, has some building rights next to the building, approximately more than 10,000 square meters. So in case we find a suitable tenant for that expansion, we will then share some risks with the developer, partner up, and have that building developed for us. So, and we do look for certain value-added options in our buildings where we can a little bit expand the property and maybe create some additional, more attractive space, but not on a large scale, on a small scale.
Vēl kāds jautājums šeit?
How do you calculate net asset value? How often does it change?
Net asset value is calculated based on the valuations, and the valuations we have done at the year end. So if you have established the net asset value through the external valuations by, for example, Colliers or TTZ or Newsec, then we also calculate NAV on a monthly basis. And if you take a look at our website, you can actually see how the NAV develops over a month period. And so far, it's been a very positive development, which means that the cash is coming in. The change month by month is actually the net cash received to the fund. So that's a simplified way of maybe explaining. Of course, I can share more about the balance sheet calculation, but I think it's written in the annual statements in very much detail as well.
Kādam citam jautājums? Maybe one quick question from me. Really two questions rolled into one. You've spoken about, let's say, the principle of only investing in Baltic capitals, and you've talked about growing the fund to a size of 1 billion euros, which is a large amount. Aren't you going to run out of properties?
Good question. I would answer that yes or no. I mean, I would say with the way we have looked at our strategies, that we can still generate a portfolio of retail and office assets, having a size of 1 billion euros. We'll probably then have one or two of the assets in our portfolio which are 150 million euros. So large assets, I think there are not too many in the Baltic states. However, when we grow to a size of 1 billion euros, of course we will have a discussion of whether we should diversify into other segments and potentially other locations. But I think today it's a little bit too early. But this is a constant discussion that we're having as at the management board and with the investor base.
But your estimate of what's the size of the market today overall, what do you think it would be?
My estimate, our estimate, we've done some analysis on that, and we estimate the commercial real estate market in the Baltics to be in a range of 8 to 10 billion euros.
Billion?
Billion, yeah.
Yes.
Yeah.
Good. We've pretty much now used up the time we had. So thanks once again, Tarmo. We wish you the best of success.
Thank you.